Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So, another day in the life of the market, whereas I guess we're a little closer to some type of tradable move, but the way the market's been behaving intraday, from my experience, we're not quite there yet. There are a few different indicators, there are a few different analytics that are saying we're getting close. And for me, I always get a little edgy. Just say we're in a 9-inning game. On the long side, I'm always my best in the first 2/3 of the game in a rally. Then in that last third of the game, you don't know if the game's going to end in 9 innings. You don't know if it's going to go extra innings. So for me, I'm always a little bit skeptical at the end of a rally. That's when I start paring down positions. That's when some things break out and some things don't work, etc. So as far as in a corrective phase, I do feel we're getting close to macro areas that could be buyable. So we could be in the 7th inning of this down move, but same way as in the upside, maybe it doesn't go 9 innings and it goes extra innings. So the question is, for us who time the market, I try and get as perfect as possible. So if we do go into extra innings, at some point, the game's going to end and you're going to get some kind of new situation. So as far as when patterns trigger, if you look at the macro pattern here, there are some times that are just easier than others. And this macro head and shoulders patterns that we've talked about, this left shoulder, the head, the right shoulder. The quick and easy part of the game is when we break a level after faulty action, you get out, and then when a pattern ignites. And if you look here at 1360, when we broke below this neckline, that was your pattern in motion. We went below it, retested, and now we're coming into, just say we close as low as 1325. If you remember, this was a pretty big level we spoke about. This actually, if you look right here, is also 1325, and then the Fibonacci is like 1320. And then really I was trying to figure out measured moves, okay? Some people look at the top of a head, which you see 1422, and everyone measures the neckline differently. Some people would say that the neckline really started at 1340. Some people would say the neckline really started at 1367. So you never quite know where the real measured move is. So you could say it's from the high to here. So that's like 70 handles. Some might say it's really the low of this area, not the high. It's really 1405 to here. And everyone has a different calculation. So really there's like just a 50 to 70 handles here, so you never know what's the perfect scenario. So from just say 1365, 50 handles brings you down to 1305. If it started at 1365 and the low here was 1405, that's about 40 handles. So 40 handles from 1365 brings you to 1325. So in actuality, it's not a perfect science. So none of us are going to be perfect. So you try and time things. If you look at this prior high here, some things somewhat align. So we're below the 100-day. We're above the 200-day. We've been cascading lower. And I still don't think that the McClellan oscillator is high enough. I still don't think the fear is high enough. But again, the same way we had this slow, methodical move to the upside. Hold on a second. Hey, guys, close the door, okay? This is a technical break right here. I'm yelling at guys. This is real time. Close the door. Thank you, Parker. Anyway, you like that, right? It's a real trading floor, real time. It goes on. If you listen to my radio all day long, too, you'll see that there are 400 guys talking about stocks, making fun of each other, crying, laughing, beating each other up, breaking monitors. That's what goes on in a firm that trades stock and not just educates. We do both. Now, back to the recap. Hello, Scott Redler back at the recap. Here you go. A little delusional today. Anyway, so it's not a perfect science. So this zone, to me, is a better buyable zone versus shorting. That's why it's really hard. That's why today, for the first time, I didn't short when we went below 1328 because I don't think there's that much opportunity. I'd rather wait for some type of buyable strategy. So anyway, with that said, we now have a new point of reference, a little bit lower, 1324. We're almost at the spot that I put the 75% chance that we'll meet around 1320 when we're all the way up here. So I have to say it's a win. People want to say, oh, whether you were right or wrong, and everyone loves to beat up on media guys on the internet or whatnot. So I guess people could say that I called this one. because at least I wasn't saying cost average buy this whole way down to like some other guys in the media or whatnot. But either way, it doesn't really matter what you say, how you say it, it's how you trade it. Because everyone knows on my side and who reads my note that I've been trying to short Apple, that we've been talking negative ever since it couldn't hold the earnings gap and it started to technically break down. We talked about shorting at 562, 560, 555. You look what Apple is today. And technically, there's no reason why everyone shouldn't have made a lot of money here, right? This was the earnings gap that didn't hold, showing you that there was no strength there, that there was no momentum. Came back, retested this 555 right there, bounced up, couldn't even bounce at all, controlled by the moving averages. And then look at what happened today. It closed today, 546, was as low as 541. This day never traded above the previous day's high. This day never traded above this day's high. Let's take a closer look here. So if you were trailing this short, this gave you no reason to get out since here. Okay, some guys actually are still short from either 620 when it first showed some faulty signals, and some guys got short once it broke this 600 area on that earnings play that lost some momentum. But either way, the most recent short strategy was really right around here when it was starting to engulf this little range, and you had a nice move. So the question is, you have to ask yourself, if you were thinking, I want to short Apple at 562, 560, 555, and you didn't make money as it goes to 541, you got to make yourself a checklist. What did I do wrong? Did I have too many shares? Did I add as it went to break lower and couldn't handle it? Did I think, or do I just not trade to the short side well? Was I thrown off because Google was strong? Like little questions of why you had a plan and why you didn't make money in that plan as the market confirmed it. Because by looking at this chart, there was no reason why, and I obviously didn't make as much as I wanted to make it, and I actually lost money today, believe it or not, in this stock, and I was trying to be short because I was short overnight, and it was hard earlier on and whatever. Anyway, Einhorn came out at his little meeting there or at that conference and said that it's undervalued, it deserves higher multiples, and I sort of agree. I actually definitely agree. My problem with Apple always was price, not valuation. People judged Apple on price, not on their PE, which is dirt cheap, not on their valuation, which is dirt cheap. So it would be great if they split the stock. Obviously, they're probably not. Oh, I got to stop saying obviously. Remember we talked about, I watched it back last night. So we have to take what we can get. So now we have a new point of reference to trade against, which is right here. Okay, today is low. And we'll move forward. I would love to be a buyer of Apple into this support, into the 100-day, into this 525. But if we don't get it, maybe we buy it versus today's low tomorrow. We'll see how it goes. But at this point, guys have been trying to short it, and I don't think anyone had as much success as they would like. So you have to actually look at what you did wrong. On the flip side, we've been talking how Google, after two bad quarters or two perceived bad quarters, held the 200-day for macro investors. And it's been trading better. It had a nice tight pattern. It's been on the price point sheet. It's been in off the charts. And today, it went. No down move here or no grease worries in Google. But anyway, this was one quarter that it missed and held the 200-day, rallied all the way back up. This is when you had that potent down move. What did it do? It held the 200-day. And then recently, it's been very, very, very tight here. So finally, it traded above this 615, 617. I talked about it with Jill this morning in morning call, and had a nice move, nice day trade, nice cash flow trade. So if you're an investor who's been accumulating on the 200-day, you're feeling a bit better. It now reclaimed all the moving averages. And if you were a trader looking for cash flow, there you go, as now this is in the game to perhaps make new highs on the year, which is what I've been saying pretty much all year as guys have beaten me up because this was my stock pick of the year going forward, and that was based on a pattern in place in December, combining it with their 5 major businesses. And at this point, people are talking, wow, Google is undervalued, because you know what they do there too? They look at price. They don't look at valuation. They don't look at PE. They say, oh, Google's 600 and change. It's going to go to 1,000. It's a bubble. It's not. They make a lot of money. They have a lot of businesses, and they have a nice stronghold on most of them. So at this point, when Facebook is valued at 100 billion and might open up at 200 billion in the same market cap as Google, people are starting to say, wow, Google really is that cheap, or Facebook is that overvalued. The art of the first day we'll start doing tomorrow for Friday. Anyway, some problems also with the market. We talked about JP Morgan. It tried to hammer out a bit of a bottom. And if you look here, this was the first day down after the write-off, traded lower, tried to rally on JP Morgan's shareholder meeting today, closing the lows, broke below this pivot. If you want to look at this pivot here, this pivot low, which we talked about in some of the notes today, was 35.76, closed below it. Next real level here is around 34, which is a gap all the way back from early 2012. So now it's in motion. It broke this lower area that it tried to hold, and there you go. Now the problem today was Morgan Stanley. Morgan Stanley's been a weak stock for, I don't know, for as long as I can remember. For the last year, everyone's been making an excuse to buy Morgan Stanley at the tail end of a rally that it has to go, and it hasn't gone. More recently, it's been below all the moving averages, and today it was the first bank to go negative. So even if you just follow day trading rules, first bank goes negative, market follows suit, it should go down the most percentage-wise. And now if you look at Morgan Stanley, which is very, very gross as far as price, is now breaking below this lower pivot. It also broke below this reactionary area. It's also below every moving average, which to me is very technically poor. That means institutions are selling it faster than these moving averages can catch up. So with that said, tomorrow we'll see how it handles 1353, but really the next level here is all the way at 1286. Now, this date is 1123, okay? So look how close, look at JP Morgan. JP Morgan on 1123, where is 1123? This is 12. Where is 11, 11, 11, 23? That's all the way here. So you want to think, okay, this is actually, so somewhere around here is that same day. And look where JP Morgan is. So even with all the problems that JP Morgan's had in the news, comparatively, I would say JP Morgan should be down to around 30 if it was trading in par with Morgan Stanley, which obviously it's not. Goldman Sachs also broke lower. This was a mini area that it was trying to hold. Another little problem spot. Remember yesterday, everyone's like, oh, look, it's a great trade. It's going to fill the gap. And we talked about time frames. Well, it was a good trade yesterday for cash flow as it traded above 101.07, filled the gap. That was your way out and failed. If you play a stock for a bit of momentum and the momentum leaves, you leave. And then today, closing the lows with some of the other banks, and it's a problem spot. So you want to take a closer look here at Goldman and see where the next level is. Stock has been really weak, just also below the moving averages. It's coming into a gap, which if you look here just to write down for future price reference, right around here. So we'll see how Goldman Sachs handles this low of 97, which is pretty darn close to. Could see it tomorrow if we get a gap down. So lots of things going on, a lot of weakness still. And again, the McClellan oscillator is only like negative 47. I like to buy stocks for oversold bounces in a broken market when it's like minus 75. The VIX is up, but it's not extreme. Gold, I tried trading it for a long, and it had a quick bounce, but nothing so extreme. It didn't have a real big bounce with any power. It did hold this prior pivot low from late December, but it didn't do it with any, I would say, confidence. You have a bit of a doji here, so at least it gives us another price point, and then you have the high. Maybe it goes sideways, and then we'll see if this stabilizes or if it continues down. Remember, I showed you this monthly chart. The monthly chart to me is a little dangerous. You finally have a wide range bar that engulfed this upper pennant, and right here is that point of reference. I still think that it's going to hit this 140 before it's that much more compelling. So you can take trades along the way, but at this point, though, it seems like it wants to go lower. The OA, look at this stock, Walter. I know everyone tried to make excuses to buy it. This looks gross. First of all, this is, I just put the monthly chart also. So this monthly chart looks like it's about to break this level here, which would be create a lot lower prices, 53.41. You go to the daily chart, and it's on the dead lows here. So it looks like it's going to fail there, but that's why you go back to see on a different time frame what it means. But this one is now below all the moving averages, breaking below this support. I hope people aren't long this one. There's absolutely no reason to be. And just there's been liquidation. Liquidation in the solar stocks, liquidation in the air stocks, liquidation in a lot of the commodity stocks, because that's what the trend has been. They were weaker before the market, and that's why they get hit the hardest. We talk about air stocks. Look at these air stocks that once momentum leaves, you leave. Look at this FSLR. Wow. Look where this is. Oh my goodness. Boom. Every takeover chatter play sold. Obviously, you don't want to be short now, but you want to make sure you're in, you know when trends change. I remember talking about this when it broke like 105 or whenever that was. So, you want to talk about big levels here? Remember how big this level was we were talking about going sideways? People thought it couldn't happen. But anyway, things happen. And if you sold here when it broke this pivot low, because this was the low, this was at even the 86, you said, oh my God, I can't sell at 86. I bought it here. And actually, no, I bought it at 150, 86. It's too big of a loss. Well, you have a lot bigger loss as this big level was broken and every rally's been met by selling. So anyway, with that said, at this point, I guess you will hear chatter here and there, and it'll be good for a little trade, but just goes to show you how you better know about your stocks and know about trends and know levels and have stops. Also, everyone always keeps wanting to buy RIM. I'm like, why do you want to buy RIM when you know it's like fundamentally and technically broken? I know now it's getting down to 11-ish. So for me, it breaks 10, it accelerates. Maybe there'll be another trade there. But I tell everyone, remember POM. Everyone was paying for it to take over. Finally got down to 4 and it went to 6. I don't know if that's going to happen with RIM, but RIM also, if you look here, new lows at 11.02. Stock technically is just broken. You have a high, a lower high, lower high, lower high, lower high, lower high. And then this here got a little choppy, a little double top. And then the last level it broke was right here. So again, if you don't want to honor stops, I know it was probably painful to get stopped out here right around 12.55, but if you did, you saved yourself another 10 or 12% or so. So with that said, you just have to know how to handle these positions and how to approach it. And I would say again, there are 3 different things working. If you're a macro investor and you're in a multi-year approach, we're only about 6% or 7% off the highs. If you're trading for a move down to the 1300, 1320 level, which we put out there a few weeks ago, and you're just cost averaging short, and you could do that, and you have the risk, that's working. Or doing the technical trading using pivot points on some days is working better than others, and then also just finding individual stock patterns that are shorts or longs. Like today was Apple was short and Google was long. There are a lot of those out there if you look for them. Just know what you're looking for and just work on your game. Work on your game. Work on your tactics. I still have to work on my tactics every day, and I'm disappointed with the last day or so of my own execution. So I know some things that I've done wrong, and I'm going to try and take advantage or work on them as I move forward, because there are a lot of guys thanking me today. Oh my goodness, I made so much money short Apple. I'm still short Apple from 562. Should I cover? Stock was like 543, and they're up 20 points in the trade, and I covered it like 551, and I got chopped up in it. But anyway, that was then. This is now. New day tomorrow. Hopefully we get some kind of fear, some kind of acceleration, some kind of buyable bottom that we could trade for more than an hour and a half. Have a great night. See you in the morning.